Morning to you, Mr. Tyagarajan. For the year 2012, are you a India bull or are you a India bear?
Thank you and good morning. I am, as of now, I am neutral. Everything depends on two basic factors, or in fact three basic factors. One is how the third quarter results are going to be coming out, which should be start coming from middle of January. Number two, how the European debt crisis is going to play out. And number three, what is going to be the government's attitude towards policy after the 5 state elections are completed. Till such time, I think it will be very difficult for anyone to predict the course of the market.
When you say neutral, what exactly do you mean by that? Are you sitting on cash? Do you have short positions, or you're not buying anymore?
I think as of now, many investors like us are on the cash position and keeping to the sidelines. As we see the BSE index oscillating between 15 and 16,000 in the last almost 2 months now. But our feel is that we will test the 15,000 again, and when these three factors play out, and only then probably people will start looking at Indian markets.
So just quickly revisit what the Nifty rates are suggesting and where they've stabilized. It has been a weakish sort of start, not by a whole lot. 4,700, however, is staying put, 4,735. But Mr. Tyagarajan, just want to get you into the global point. You know, have the global markets started factoring in a breakup of EU? Because some strategists believe that. And if yes, then what could it mean for emerging market equities down the road?
See, there is enough liquidity in the global markets, and our feel is that the quantitative easing will continue both in the US as well as in Europe. Therefore, there is ample liquidity. But unfortunately, people are shy of coming into the emerging markets. Emerging markets have done terribly badly, and unfortunately, India is in the bottom 3 or something like that. Therefore, at this point of time, as I said, till the first quarter end, there will not be enough light at the end of the tunnel, and then only people will start looking at Indian markets. Our sense is, as some of your speakers were talking previously, everything is picked out. The interest rate cycle is picked out. The negativism is so much, therefore we could say it has bottomed out, which is good news in the sense if there is a good trigger, whether in the form of reduction of interest rates, or that the rupee starts strengthening, or the corporate earnings have bottomed out, then there could be a positive trigger. But unfortunately, we do not see any such trigger at this point of time, and we do not know whether it will take 1 quarter or 2 quarters. Till such time, people will be on the sideline, then only money could start coming back to the emerging markets, including India.
Right. So, Mr. Tyagarajan, let me make a hypothetical case here. Someone gives you $1 million to invest in India. How will you invest that $1 million? In fixed deposits, in gold, if stocks with stocks?
See, as of now, fortunately, depositors are getting high interest rates in India. Therefore, I think many of them are sticking to that. The debt continues to be attractive. It is more by default. For example, if my numbers are right, people were allocating 10 or 15% to debt. Now it has gone beyond 50%. Not because the allocation has gone up, but more because the equity investments have shrunk both in value as well as outflows. Therefore, till such time, I think people will only be looking at these two alternatives. And I still believe there could be one more upside to the gold from the current levels. That's what the people in the know and in the commodity sector are talking about. We could see gold again going back to 1900 levels or something like that, and then there could be a replacement. So these three could be an alternative to the investors.